Basin Electric has a long history of doing a fantastic job meeting the needs of our member systems.
We have new staff that are really excited about what they do.
Well, I think they're very excited. I think that most of our new staff have come in and really accepted the role of being part of the cooperative family.
It was definitely a group effort, definitely a teamwork effort. There's no way we could have done it ourselves.
And everyone just pulled together and was really on board with doing that, looking at a different way to do things.
We've had to work as a team with everyone else that has been involved, and quite frankly, it's been across the co-op.
You can't help but get caught up in the excitement and how great Basin really is.
But they all come together to form a team that has the ultimate goal in mind of getting the project completed.
Teamwork, working together to make sure that we continue to serve our members. Because bottom line, that's why we're all here.
Where can we add value? Where can we help them?
They've come in and embraced their work. They've done a good job of learning how to do the job, but also being part of the team.
You could see how passionate they were, how much pride they took in the cooperative.
And if they're growing, we're growing. And we just want to make sure we continue to meet their needs.
And if that doesn't speak to the way that we answered questions and what people on the outside think of Basin, I don't know what would.
Being able to say we did it.
Just a tremendous team effort.
Good morning, everyone, and I thank you for being here today. I'd like to take some time with you this morning to discuss the financial condition of our cooperative. Let me just start off by saying 2015 has truly been a historic year for Basin Electric, a year that we're confident has helped shape a promising future for you, our members. The positive future of our cooperative comes in many forms. In part, it comes in form of the 30 investors that worked with Basin Electric during the Rural Utility Service buyout. It comes in the form of Dakota Gas's urea project financing, which was a beam of light amid dropping commodity prices this past year. Our positive future also comes in the form of strong bond ratings from the 3 major rating agencies, and it comes in the form of enviable load growth. What hasn't changed in the course of history is that growth and prosperity rarely emerge without the presence of challenges. There are a lot of things to look forward to, but Basin Electric also gazes toward a future that partially involves questions in regards to overregulation in the energy sector. The cooperative always has been and always will be a leading advocate for safe, reliable, and affordable electricity. We were built on these standards. Indeed, the Environmental Protection Agency's recently announced Clean Power Plan is an issue that at times seems to cast a shadow on these standards which we hold dear. Just remember, we're in the business of serving you, our members. You made us who we are. This year, Basin Electric is reminded that we're on a journey dedicated to people, power, and purpose. That was truly the message portrayed in the introductory video. And so, when it comes to celebrating the victories of this year and standing together to face the challenges of tomorrow, know that we stand on your behalf, always, especially when it comes to the cooperative's financial endeavors. Co-op pride runs deep for me, and I know the same rings true for all of you. As I've said before, I know what it feels like to be one of the guys at the end of the line. And I'm very honored to stand before you today to paint a picture of Basin Electric's financial state. People, power, purpose. The first of those is people, and you, our members, deserve our undivided efforts in all financial affairs. Let's start by taking a moment to address Basin Electric's decision to buy out of our US. Last year, we mentioned the National Environmental Policy Act, or NEPA rules, proposed by the USDA Rural Development Office, were an area of grave concern. We were concerned about the impact the proposed rules would have on our ability to conduct and transact business with RUS in a timely and efficient manner, especially in light of our significant capital needs over the next several years. We're happy to announce that in a private placement transaction that spans several weeks in preparation and encompassed numerous investor presentations that took us from coast to coast with numerous stops in between, Basin Electric raised more than enough money to buy out of RUS. The cooperative received $1.9 billion in initial offers. This was far greater than the $800 million we expected to raise in the private placement arena. Ultimately, we borrowed $1.5 billion, given the very attractive interest rates we were offered. This was more than the $1.2 billion required to complete the RUS buyout. The $300 million differential will be used to partially fund projects that are currently under construction. This was the largest private placement transaction involving a generation and transmission cooperative, the largest U.S. private placement transaction across all sectors thus far in 2015, and the third largest U.S. private placement transaction ever to date. The third largest ever. Think about that. That in itself is truly quite amazing. It's also worth noting Basin Electric is now working with its first foreign investor, South Korea's Dongbu Insurance, as our transaction was the first globally marketed G&T transaction and the first U.S. private placement transaction marketed to an Asian investor. As I said, we're witnessing history. I want to emphasize the great level of teamwork that went into the buyout. It was undoubtedly a very successful transaction, and people throughout the cooperative who were involved did a terrific job. We're very proud of the work that was put in by many, and we're excited for the future. While we have many strategic financial partners, this year we relied heavily on our two cooperative allies, the National Rural Utilities Cooperative Finance Corporation, or CFC, and CoBank. Of the 30 investors that participated in the RUS buyout, CFC invested the largest dollar amount at $227 million. Let's now hear from CFC's Sheldon Peterson as he talks about the CFC Basin Electric relationship and shows his enthusiasm about working with the cooperative.
CFC has a long-standing and very special relationship with Basin Electric Power. It's a relationship based on a shared history, a shared mission, and most importantly, a shared purpose. This year, CFC was pleased to participate in the historic $1.5 billion refinancing agreement with Basin in the private placement market. CFC served as the largest investor in this transaction, and we were aided by our partnership with Farmer Mac. The deal is the latest in a long history of successful transactions between CFC and Basin. CFC's commitment to Basin means we never stop looking for ways to serve you. When Basin asked CFC to provide a $45 million commitment to a U.S. bank-led syndicated revolver, we were pleased to step in and do so. We're proud to be the sole lender on Basin's $130 million tax-exempt commercial paper backstop. CFC has a vested interest in Basin's success, and so we're especially pleased that Basin's credit profile continues to reflect strength. CFC evaluates credit risk with a formal credit rating system, which is an integral part of our lending process. CFC looks at quantitative criteria, including leverage, coverage, liquidity, and other factors. We also look at Basin's position within the industry and your management controls. These measures confirm that Basin continues to perform strongly. In addition, Basin's wholesale power contracts and your efforts to extend those contracts to 2075 send a strong message to your business partners and the capital markets. It's without question that the solid financial performance of Basin's members continues to play a large role in our confidence in your continued success. The financial needs of G&Ts are continuing to evolve as the regulatory environment becomes more complex. Timing and availability of funds is now just as important as affordability. As your member-owned financial partner, CFC is uniquely positioned to respond to these evolving needs. Flexibility, responsiveness, and innovation are hallmarks of CFC's approach. CFC sees you as more than borrowers, more than member owners. The relationship we have is much deeper. We're true partners. It's a partnership that has thrived for nearly 50 years. And our success together extends beyond Basin and beyond CFC. It's a success that extends to the entire electric cooperative network. As we look forward to the future, I'm confident we will continue to build on our successes together.
Basin Electric is certainly pleased to have closed yet another successful transaction with CFC. Given RUS has yet to release the proposed NEPA rules, which were described as imminent a year ago, the potential impact of the Clean Power Plan, as well as being in an environment where interest rates will undoubtedly begin to rise, buying out of RUS was definitely prudent and without a doubt the right decision. Just as Basin Electric worked with a cooperative partner when handling the RUS buyout, the same rings true for the financing of the urea project at Dakota Gas. In May, Dakota Gas closed on a financing that will fund the bulk of the investment required for the urea plant. This private placement is comprised of $475 million of secured long-term debt provided by a group of 4 investors. The largest investor in this transaction was CoBank and some of its affiliated Farm Credit System members at $200 million. Let's now hear from Bob Engel as he talks about CoBank's involvement in the financing of the urea facility.
One of the things I've learned in my 15 years in working personally with Basin is to expect the unexpected. And I think that's fantastic that I do expect the unexpected from Basin. I believed a long time ago that DGC was an important part of Basin's overall strategy. When you're dealing in commodity type markets, some days feel better than other days, and that's just the way it works. But quite frankly, we thought it was so important, we actually took our board of directors up to see the DGC plant and see what Basin had done here, how they had rethought an operation that quite frankly had some good thought behind it, but really was never able to execute the way the plant was originally constructed and intended to do. And if you take a look at what's happened since that point in time and how DGC has found its spot in the market, how it has provided additional value to the members of Basin, it's been tremendous. Now this next step to take the DGC Synfuels plant and move it into urea capability is really just a continuation of what we've seen as a very thoughtful and innovative and forward-looking approach that the Basin board and management, quite frankly, has always typified. It's in their culture. It begins at the tone top, and it's in their culture. And as I have the luxury and actually the privilege of spending my weeks, my days, my years in rural America, the need for organizations to take leadership roles in determining how do we make rural America more successful? How do we create more jobs? How do we create more value? How do we provide more opportunities for those that choose to live and work there to be more successful? And if you think about the need of the producer out there today and the need for urea and where they have to get that today, bringing that much closer to the customer, giving that dependable supply to an area that is just rich in agriculture, to me is going to prove to be to a huge advantage for those producers.
It's amazing to think that the relationship between Basin Electric and CoBank goes back almost 40 years. Time does indeed go fast. The urea facility is certainly a huge step for Dakota Gas, and we appreciate the part CoBank and its Farm Credit System partners played in bringing the urea project financing to fruition. Next, let's talk about our credit ratings. In late April, upon visiting the 3 rating agencies used by Basin Electric, all 3 agencies affirmed our strong bond ratings. Fitch Ratings affirmed its A+ rating with a stable outlook. That stable outlook was shared by Standard & Poor's, which affirmed Basin Electric's A rating. While Moody's affirmed the cooperative's A1 rating, it changed its rating outlook from stable to negative. While disheartening, let me assure you that the Moody's revised outlook had absolutely no impact on the interest rate associated with the $1.5 billion private placement transaction completed earlier this year. Nonetheless, this is something the board and management take very seriously. So seriously, in fact, that maintaining the financial strength of the cooperative is one of our strategic initiatives. Moody's cited a deterioration in the consolidated operating performance of the cooperative as the reason for their action. Unfortunately, with the very low commodity prices we're currently experiencing and the corresponding impact that will have on Dakota Gas's financial performance, challenges definitely lie ahead. When we visit the agencies again in early December, rest assured we will reiterate that the cooperative is in good hands and that our financial performance over the long term is projected to be relatively strong. But I cannot stand here today and tell you with any degree of certainty that we won't potentially see a downgrade in our Moody's rating sometime in the future. We definitely have our work cut out for us, but we're up to the challenge and will strive to convince Moody's otherwise. We have grown our total consolidated assets from $2.5 billion in 2005 to a projected $6.8 billion in 2015, nearly tripling in size. This has required us to add hundreds of millions of dollars of additional debt. Yet, keeping Basin Electric financially strong with the excellent bond ratings we currently have enables us to borrow money in the private and public markets at very attractive rates. This lowers the overall cost of service to you, our members. As a point of reference, as of September 30th, we had just over $4 billion of debt outstanding at a weighted average interest rate of about 4.3%. For a portfolio of debt of this magnitude, that's really quite admirable. Regarding other financial statistics, in 2014, our consolidated earnings were nearly $50 million, and our average cost of power to our members was 54.1 mils. In terms of an average wholesale cost of power, this too is a very attractive rate. Basin Electric's equity to capitalization ratio at the end of 2014 was 20.4%, using the methodology prescribed in our indenture. Our liquidity at the end of 2014 totaled over $1.1 billion, including about $320 million in cash. These last two, equity level and liquidity, are two measures of financial strength that are carefully scrutinized by the rating agencies, the banks participating in our revolving credit facilities, and potential lenders. Before moving on, I would like to remind you that the complete results for 2014 were published in Basin Electric's annual report, which was mailed in late March. If you haven't already seen it, that report is available at the registration desk if you would like to pick up a copy for review. As our financial position remains strong, so does our load growth. Last year, we talked about how energy needs in northwestern North Dakota were in a continued growth spurt from the previous year. Despite the recent slowdown in the Basin oil fields, the region continues to show growth and thus has an impact on us financially. In addition to the transmission facilities currently under construction in the region, we're continuing to expand 2 peaking stations, the Lonesome Creek Station west of Watford City, North Dakota, and the Pioneer Generation Station northwest of Williston, North Dakota, both natural gas-based peaking stations. Phase 3 for Lonesome Creek Station is estimated to cost just under $108 million, while Phase 3 for the Pioneer Generation Station is projected to cost $161.2 million. Given the whole membership is growing and that growth is certainly positive, we understand and appreciate the needs of our members in every state we serve. All told, between now and 2020, we're anticipating more than $1.6 billion new infrastructure to meet the needs of our members. As always, the question is, how are we able to finance all of this? Once again, the question is our strong financial condition and associated creditworthiness. That financial condition and associated creditworthiness is bolstered by the financial strength of the entire membership, as well as the commitment shown by many of you through the extension of your respective wholesale power contracts. Amidst our growth as a cooperative, there remains a strain on our equity level. As a result, we have been limited in our ability to retire capital credits since 2009 due to a covenant in our indenture. That stipulation calls for a minimum equity to capitalization ratio of 20% after the payment of any patronage. Nonetheless, over the past several years, our members have certainly benefited from Basin Electric's operations. We have retired $143 million in patronage capital, as well as given $306 million in bill credits and $184 million of power cost adjustments. Over the last 15 years, we have returned $633 million to the membership. After holding our rates steady for the last 3 years, for those members who have extended their wholesale power contracts, there will be a rate increase of 3.7 mils in 2016. The average rate charged to these members in 2016 will be 57.7 mils. There's a lot of diversity across Basin Electric's membership, and load growth across our membership is a good thing, no matter where it's taking place. Fortunately, our broad and diverse membership brings a relatively stable average mill rate. We're proud to say it's been a good year, challenging at times, yet rewarding. It's exciting to see the urea project progressing and the regional agricultural economy continuing to promote product sales from the Great Plains Synfuels plant. The demand for fertilizers like anhydrous ammonia and Dactyl 45 remains strong. It's worth noting that in 2015, we're projecting that approximately 70% of Dakota Gas's revenue will come from products other than natural gas. That number is expected to increase going forward, especially with the urea project becoming commercial. The gasification plant remains a viable long-term asset for our members. Our ongoing analysis continues to show that Dakota Gas provides a yearly benefit of approximately $60 million to the membership. That's nearly 3 mils. In addition, the operations of the Synfuels plant contributes to the energy economy of the state and the region. Before closing, I just want to say again how excited we are for the future of Basin Electric. It's been a great year for the cooperative, and the teamwork that continues to go into projects like the RUS buyout, financing the urea project, assessing risk, procuring materials and services for use in our facilities, or preparing timely and accurate financial statements, to name a few, is nothing short of spectacular. It took many great minds to get where we are today. It's an incredible honor to work with a group of very talented and dedicated professionals. They're led by the managers and assisted by the support staff shown on the screen. I can't reiterate enough that we, the entire Basin Electric team, are here to serve you, our members. That's never going to change. people, power, purpose. Ultimately, we're proud to say our cooperative remains financially strong. This year marks the 54th year of Basin Electric's existence. And if we've learned anything from the years behind us, it's that by working together, we can accomplish those goals that benefit all of us. So in closing, once again, in the opinion of management and speaking on behalf of the board, Basin Electric is in sound financial condition and is ready to meet the needs of you, our members, now and for many years to come. Thank you.